Yes, students. Now let us move on to the next question. That is based on flexible budget. Once again, we are going to continue with the same. A factory is engaged in manufacturing plastic buckets. So this is the finished goods. And it is working currently at 40% of its capacity. And at 40%, it is producing 10,000 buckets per annum. So this is my output. Breakup cost of one bucket, that means per unit is given. Raw material. So this will be my variable cost. As I told you earlier in the past lectures also, that you have to identify fixed and variable cost. Labor will be also treated as variable cost. Overheads, they have said it is 5 rupees and it is 60% fixed. Okay, and that means the balance, yes, is variable. 40% it is variable. So 5 rupees ka 60% is 3 rupees. So balance 2 rupees is variable cost. Selling price of the bucket is 20 rupees. If it is decided to work the factory at 50% capacity, now they are planning that the factory should be operating at 50 instead of 40. And with this, the changes will be that the selling price will fall by 3%. So how much is my selling price? 20. So 20 rupees ka 3% less. So my selling price comes to 19 rupees 40 paisa. Okay, that is what the answer I have got. 19 rupees 40 paisa. And then they want you to calculate for 90% capacity, and at 90% capacity selling price will fall by 5%. So 20 rupees ka 5% down kar do, so it will come to 19 rupees. Okay, so this is the change, and accompanied by a similar fall in the price of raw material. So at 90%, they are saying that there will be a fall also of raw material. So raw material was how much? 10 rupees? Yes. So raw material ka 10 rupees less 5%. So 10 rupees less 5% will become 9.5. So these are the expected changes. Yeah. So at 50% only the selling price is falling, but at 90% the selling price is falling, plus there is a similar fall in raw material also. And they have told you to prepare, to calculate profit at 50% and at 90% capacity levels. And they also want you to calculate the break-even point for the same capacities. Okay, so let us move on. Yeah. So as I have been saying always, if there is a change in capacity, then there will be a simultaneous change in the output also. Okay. So they have said that at 40%, the production is 10,000. So at 50%, it is how much? So you are going to cross multiply, and at 90%, it is how much? So let us cross multiply and see. 10,000 into 50 divided by 40, it is 12,500. Next, 10,000 into 90 divided by 40. So this is 22,500. Okay. So this completes my first working note, and this working note number 2, which I just explained at the beginning of the question when I was discussing it with you. At 50%, as I discussed, there will be a change only in the selling price, and at 90%, there will be a change in selling price as well as raw material price also. Okay. And then we will prepare our flexible budget. Okay. So in this case, when we are preparing our flexible budget, we will prepare in sync with marginal. Why? Because we have to calculate profit. Also, we have to calculate break-even point. So it is advisable that we make our flexible budget in sync, in tune with marginal cost. Okay, correct? Otherwise, see, the flexible budget starts with variable, then we take the total of variable cost, then comes the fixed cost. We take the total of fixed cost, Okay, then we calculate total cost, then we add profit, and then we get our sales. Okay, yeah, generally we do this, but since in the question break even point is supposed to be found, so now I will tune in my flexible budget in the format of my marginal cost sheet so that I can also calculate break even point for the same question. Okay, so I hope I'm clear about this. So don't think I have changed the format. I have synced the format with the requirement of the question. Okay. So marginal cost sheet starts with obviously sales less variable cost. So I have three variable cost as per the question. That is direct material, direct labor, and overheads. Okay. And the calculation is there. Fine. Now, whatever changes are there, I have highlighted it with green. Okay. So, yes, yeah, you can see. So, at 50%, there was a change in selling price only. And at 90%, there is a change in selling price plus there is a change in raw material price also. Okay. What we calculated in working note number 2. Rest other things will remain same, will remain constant, because the question has not specified any increase or decrease for other expenses. Okay, so as I have been discussing earlier also in the past questions, in absence of information, direct labor, overheads, and fixed cost will remain same. Okay, so for variable cost, CPU column will remain same, and in terms of fixed cost, the amount column will remain same. Okay, so this is how it goes. Yeah, so yeah, yeah, you can use the same shortcut as discussed earlier. Yes, you can do that. Okay, so what was the shortcut? The shortcut says that, okay, let me highlight the shortcut in some other ink. Yeah, so the shortcut says that, yeah, 10,000 upon 1, because I'm going to multiply equal to and multiplication sign 2 times. And here it's going to be 12,500 upon 1 equal to multiplication sign 2 times. And here it will be 22,500 upon 1 equal to sign and multiplication sign 2 times. Okay. So if we use the shortcut, your answers calculation will be much faster. Okay. Yeah. So it's 10,000 divided by 1 equal to into. Okay. Yes. Divide by 1 equal to into. So first answer I want for 20. So I'll type 20 on calci and press equal to sign. So it is 2 lakhs. Okay. Yeah. Then type 10, press equal to. Yes, you will get the answer 1 lakh. Type 3, press equal to, you will get the answer 30,000. Type 2, press equal to, you will get the answer 20,000. Okay, so this is how you have to do. Okay, then subtract this. 2 lakhs minus this will give you the contribution. Fixed cost is 3 rupees, and 3 into 10,000 is 30,000 minus contribution. So my profit is 20,000. Okay. If you don't want to use the shortcut, you can use the other method, just multiply CPU with the output. Okay. Yeah. Whatever are the changes, I have highlighted it in yellow. We have done the working note for it in the beginning. और जहाँ भी कोई changes नहीं बोला है, वहाँ पे मैंने variable cost के लिए CPU same रखा है, fixed cost के लिए amount column same रखा है. Okay. You can, yeah. You can just identify it over here. See this, I've kept the amount column same. Okay. Yes. Fine. So yeah, it's very easy. For the other column, it is 19.4 into 12,500. So yes, and 22,500 into 19, 4,27,500. Okay. Accordingly, you will get your answers. and then they want you to calculate BEP. So if the question is silent, you have to calculate both BEP in units as well as rupees. Okay. So at break even point, what happens? You are paying the fixed cost. The fixed cost is in the numerator. And if you want your answer in units, as I discussed in the chapter of marginal cost sheet, I said if you want your answer in units, you should always divide it with contribution per unit. Okay. And if you want your answer in rupees, you should always divide with PV ratio. Okay. So all these points we have already discussed in the chapter of marginal costing. The numerator will not change, but the denominator will change. If I want my answer in units, it will be this. If I want my answer in rupees, I will divide with PV ratio. Okay. And if not, if you are not using the PV ratio formula, then you can calculate BEP in rupees by also using the alternative formula, that is BEP in units multiplied with selling price per unit. Okay. So all this we have discussed. It's there on my lecture of marginal costing. This particular explanation is already given there. Okay. So in the first case, fixed cost is 30,000 divided by 5 rupees contribution. So my break even point is 6,000 units. That means if I don't want to face loss, I should be selling above 6,000. Okay. Multiplied with selling price per unit 20 rupees. So my answer is 1,20,000. Okay. And if you want to use the formula of PV ratio, you can even use that formula to verify your answer. So PV ratio is what? Contribution upon sales into 100. Okay. So what is your contribution? 5 rupees. And what is your sales? 20 rupees. Okay. So what will I take here? In the first case, 5 divided by 20 into 100. Okay. So what is 5 divided by 20 into 100? So it is 25%. My answer is what? 25%. Okay. So if you want to cross check your answer with this formula, you can even go with that. Okay. Yeah. So what does the formula say? Yeah. It is fixed cost. So fixed cost I know is 30,000. We just got PV ratio. How much? 25%. Yeah. So just cross check your answer. 30,000 divided by 25. Press the percentage sign. See, your answer is 1,22,000. It has to match with it. Okay. So this is how you will cross check your answer. Okay. Then coming on to the next part at 50%. So 30,000 fixed cost divided by PV ratio as per the statement is 4 rupees 40 paisa. So this is my what do you call BP in units. Okay. Multiply this with the selling price 19.4. So this is my answer 1,32,273. Okay. If you want to use the PV ratio wala formula, you are free to use that. Okay. So PV ratio wala formula, if I use the contribution, so 4.4 divided by sales 19.4 into 100. This is what I will take. 4.4 divided by 19.4 into 100. So kitna ho gaya? 22 point, go up to 4 decimals. So 22.6804%. Okay. And now when you use the PV ratio formula, so you will take 30,000 divide by the PV ratio, go up to 4 decimals for accuracy. So 30,000 divided by 22.6804%. See, it has to match. 1,32,272.7, that makes it to 273. Okay. And then coming on to the last part, the last column of 90%. So fixed cost is 30,000 divided by 4.5 contribution to 6,666.66666. Okay. Yeah. Multiply this with the selling price. So this is my BEP in rupees. I can use the other formula, contribution 4.5. Okay. Contribution 4.5 divided by 4.5 divided by 19 sales into 100. So kitna aaya? 23.6842. You can go up to, go up to 4 decimals. Okay, so 23.686842. Okay, So go with this formula. Let's check. 30,000 divided by 23.6842%. Yes, it's matching. It has to match. Okay. So I hope it is clear with this. Okay. How to verify your answer. Everything is clear about it. Again, I will repeat. All this comes with only practice. Okay. So in let's end here, and next lecture I will take up flexible budget based some other variety of question. Okay.